Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. Let's say she receives a 25% discount on bottles of wine. Employee discounts. What's going on? My name is Joey and I'm the founder of Universal CPA Review. You're probably here because you're ready to pass the CPA exams once and for all so that you can advance in your career and move on with your life. Let me be the first to tell you that I've been there and I feel your pain. But I'm also here to tell you that the CPA exam doesn't have to feel like such a maze, and there is a path to a passing score. So what are you waiting for? Don't waste any more time. Commit to the process because it will pay off. In my opinion, I say let's knock out the CPA exams once and for all. Educational assistance. All right. So if her employer reimburses $4,000 for her MBA courses, that would be considered a fringe benefit. And finally, gym memberships. All right. So thinking about which fringe benefits are taxable. So what you need to know is that the fair market value of any non-excluded benefit is considered taxable income. All right. So an example of this could be the personal use of company assets. All right. So if Linda is using a company car for personal purposes, that would be considered a taxable fringe benefit to her. All right, what about employer contributions? So let's say that Linda's employer, Planet of the Grapes, contributes to her Roth 401k. Those contributions are going to be taxable to her now. All right, so what about group term life insurance? So let's say that Linda gets up to $50,000 of employer-paid group life coverage tax-free. Anything above $50,000 will become taxable income to Linda based on the IRS cost tables, not the whole premium amount. All right, so it's going to be up to $50,000. Anything in excess becomes treated as taxable income and is therefore a taxable fringe benefit. All right, so again, with Linda, the theme remains the same. Compensation that produces economic benefit is almost always going to be taxable to some extent, unless Congress specifically excludes it. All right, so let's dive a little bit further into life insurance. All right, CPA candidates confuse this every single time. All right, so we need to separate two things. We need to separate premiums versus proceeds. Premiums are the amount paid for the policy. Proceeds are the lump sum payout when someone dies. Okay, so for Linda Larper, if her employer pays life insurance premiums on her behalf, those premiums can be partially taxable. And the rule here is that up to $50,000 of coverage is allowed tax-free. Anything above that coverage limit becomes fully taxable to Linda. All right, but the proceeds, right, that payout at the end when the insured person dies, those are not going to be taxable to the beneficiary. Okay, so proceeds are tax-free. Think of this like two rules. While the policy is active, premiums can be taxable. When the policy pays out, the lump sum proceeds are excluded from income. All right, so let's now apply this to Linda Larper again. Planet of the Grapes, her employer pays $65,000 worth of life insurance premiums covering Linda. Now remember, Linda can exclude coverage up to $50,000, but everything above $50,000 is a taxable fringe benefit. Okay, so Linda must include $15,000 as taxable income, right? That's the excess over $50,000. All right, so a little exam hack. Try to write this down at the exam center. $50,000 life insurance exclusion limit equals only applies to premiums, not proceeds. All right, so now let's shift into non-taxable fringe benefits, meaning things your employer gives you that have value, but you don't have to recognize income. Employer paid health or accident insurance, not taxable to the employee. Payments from those policies are also non-taxable if they reimburse actual medical expenses or compensate for permanent injury. All right, so also we have de minimis fringe benefits. Think super small perks that are not worth tracking, like Linda printing concert tickets quickly on the office printer. Right? No journal entry is going to be necessary, therefore no taxable income. The IRS doesn't care. All right, so the theme here, if it's small and administrative tracking and it would cost more than the benefit itself, it's non-taxable. All right, so bringing Linda back in. If Linda says, hey, I printed my concert tickets at work, do I owe tax on this? The answer is definitely not. This is de minimis, tiny value, hard to track, not income. So this is a test question setup they love. All right, they'll try to trick you into treating every perk like taxable compensation. But remember, small administrative convenience benefits, always think no tax consequence. Meals and lodging can also be non-taxable fringe benefits, but only if they're provided for the employer's convenience and on the employer's premises. So if Linda has to stay at a hotel because she's working a late shift for her employer, the lodging is excluded. All right, so education assistance is also big on the CPA exam. Employers can give up to this threshold amount per year in education benefits, completely tax-free. All right, so this applies even for graduate coursework. So if Linda gets employer paid accounting classes up to this threshold amount, she can exclude that fully. Another exclusion category is adoption and dependent care benefits. All right, so for the current year, we have these threshold amounts that you should be familiar with. We don't have to memorize them because they change every year and the exam is not testing you on it. But what you do need to know is that these are going to be subject to modified adjusted gross income phase outs. All right, so dependent care benefits are also popular exam points. So employees can exclude up to this threshold amount of employer-provided dependent care assistance. This applies to childcare and care for dependents who can't care for themselves. All right, so Linda can use this exclusion if she's paying for daycare for her child or caring for a dependent spouse. All right, so now let's talk about tuition. Employees at universities can get tuition reductions and exclude it. So if it is provided in a non-discriminatory way. Undergraduate tuition discounts are excluded. Graduate tuition discounts are excluded only if that employee is teaching or doing research. Okay, so if Linda is a graduate teaching assistant and her school reduces tuition while also giving her a stipend, the tuition reduction is not taxable. Okay, so now let's talk about employee discounts, very testable. Merchandise discounts can be excluded up to the employer's gross profit percentage. Service discounts can be excluded up to 20% of the fair market value of the service. So, for example, if Linda works at an auto dealership, she can exclude a discount up to the gross profit percentage. Anything beyond that discount becomes taxable. Transportation benefits also give exclusions up to certain monthly limits. All right, so be familiar with the limitation for the current year, and that can be included for parking or transit passes. This is going to be tax-free. All right, so if Linda pays this amount towards her parking garage monthly, that's excluded from her taxable income. Anything in excess would be taxable. So these are inflation updated every year, but on exam day, they'll give you the limit itself. All right, so just know this conceptually. Transportation and parking can be excluded up to a monthly cap. All right, so last one in this set, we have retirement contributions. Employer contributions to a non-Roth qualified plan are non-taxable when contributed. All right, so they're only taxable when withdrawn in retirement. So employees can also make pre-tax contributions. Those reduce taxable income now. So where does the tax come in? It comes in at distribution. All right, so if Linda defers $10,000 into her 401k, she isn't taxed today. She'll be taxed later when she takes the money out. All right, so our little tax timing rule. Contributions are not taxed now. Withdrawals are fully taxable later. So this is the core difference between Roth versus non-Roth retirement planning. All right, so now let's talk about FSAs. All right, this stands for flexible spending arrangements. So these are another extremely common non-taxable fringe benefit that a CPA candidate must know cold. All right, so FSAs allow employees like Linda Larper to set aside pre-tax income from their salary and use those funds for qualified medical or dependent care expenses. So think about things like copays or prescriptions, contact lenses, daycare, and out-of-pocket medical spend. Here's why this matters. Because this reduces taxable income today. So if Linda earns $60,000 and she contributes $3,000 into an FSA, she's only taxed on $57,000. That's immediate tax savings. All right, so for the current year, we do have this limitation that they can contribute up to for an FSA plan. All right, but here's the catch. And students always miss this. So FSAs follow what we call use it or lose it rules. So whatever Linda does not spend during the plan's year, she's going to lose. All right, so there is this 2.5-month grace period, but after that, any unused amounts will expire. So some employers will allow a small carryover up to this amount for the current year, which gives a little flexibility. But the key takeaway here is that Linda must plan her FSA contributions strategically to avoid losing money. Okay, so think of FSAs as a great pre-tax planning benefit, but only when the employee is confident they will actually spend the amount that they set aside. All right, so now let's close out this entire section by pulling everything together. All right, there's a lot of fringe benefit categories. We have retirement contributions, we have employee discounts, tuition reductions, meals and lodging, dependent care, adoption assistance, FSAs, and the exam will absolutely test your ability to distinguish which are taxable and which are not. So anytime you see Linda Larper on the exam in fringe benefit land, think this structure. Always ask, is this for the convenience of the employer? Is it required as a condition of employment? Is there a statutory exclusion limit? Is this benefit tied to medical, dependent care, or an educational purpose? If the rule aligns with those guardrails, then there's a strong chance that it's going to be excluded. All right, so everything we covered fits inside one of those buckets. And you now have a high-level mental map for why some fringe benefits are taxable and others are not. All right, so this summary is essentially going to be your fringe benefit cheat sheet.